Hi, everybody. Welcome to our special webinar today, which I call Trade Earnings Like a One Percenter. All right, what is a one percenter? You hear about a one percenter in the news, but the one percenter I'm talking about is the trader that is at the top 1% of their knowledge, their success ratio as a trader, as a short-term trader. And so one of the things we're going to talk about is how one percenters trade earnings ahead of the marketplace. That's the plan today. This session is being recorded, all right, and the recording will be available to you shortly after the live webinar. I tend to get these out about an hour to 2 hours after the webinar is over. So you should have this in your hands shortly after we're finished. Second thing is that, typically what we do is we do Q&A sessions. I can guarantee you right now I'm not going to be able to get to all of your questions. But I will have Jay checking the boards, and if Jay sees questions that are more popular, he's going to be spitting them at me. I'll give you as many answers as I can. And then finally, I'm going to leave you with something. We're going to have a special webinar next month, a series, which is going to be geared toward essentials, trading essentials. So I call it Tom's Trading Essentials. And it's the things that you really need to focus on, that in more detail than what I'm talking about today. So that will be a 2-part session. If I can make it a 3-part session, I will. We'll talk about that more toward the end of the program. All right. So before I begin, you see the disclaimer that's on the screen. And because I'm sending each of you the recording, you're able to stop this and read it from one end to the other. The few things I want to talk about on here for just a moment is, number one, stock and options trading has large potential rewards, but also large potential risk. The other thing I want to mention is myself, Jay, and everyone else that's associated with Tom's Trading Room, LLC, we are here today as your educator. All right, we're your teacher, we're your educator. We're not brokers. We're not professional investment advisors or financial investment advisors. You need a broker to trade with. You must meet certain requirements, and everything we're going to talk about today is in U.S. dollars unless noted otherwise, right? So that's the plan. So I'm going to break this down into a couple of things that I want to do with you. First, we're going to talk about I call it Trade Earnings Like a One Percenter. I want to review some slides with you. Now, most of you in here understand some of this. I believe everybody's going to get something out of this, but I want to make sure that I'm covering this for anybody here who needs kind of an earnings refresher, or those of you that are new to our tools or new members. Just some areas we're going to go into. I'm only going to go into 3 parts of our site. All right, looking for trades today. I mean, we've got tons of stuff that you can look at, and it's all there at tomsoptiontools.com. For those of you that are new to us, or those of you that are kind of coming back, we do have a free trial. If you're interested, you just go to www.tomsoptiontools.com, and right there, before you put in your username and password, you simply click on that 7-day free trial. You can sign up, and I will also be sending to you when you sign up for this it's a 5 to 7 part video series. All right. And that 5 to 7 part video series really goes into what I think are the most important steps to our software to get started. It's a getting started series, and it goes through the entire gamut of how to get the most out of the least with our tools. All right. So today, however, I'm going to go to stock charts just for a moment. I want to go to something called earnings rankings, and I also want to go to something called earnings effects. All right. That's everybody in here that's a tools member has access to those pieces of the tools. All right. So let's go ahead and get started. So the first question I have here, and I'm not going to do any polling today, but I want you to think about this. What stocks have options that are the most traded? All right, stocks that are in the PPP, the Penny Pilot program. All right, those are stocks that have options that are the most traded. So think about this. Remember, there are 4,000 plus or minus optionable stocks, right? The ones that are in the Penny Pilot program really bring it down to about 400. So of all stocks, only about 1% are in the Penny Pilot program. Of all optionable stocks, roughly about 10%, right? Now, when you factor in stocks that trade weeklies, which is an additional product that's offered to certain stocks in the penny pilot program, now we're really only looking at about 250, possibly 300 stocks max. All right. And the other thing where options, of course, in stocks that are most traded are stocks that constantly move off the news. Now, when we think of news, we think of a couple of things. All right. Earnings is one piece of news. But then there are also government reports, there are buy-seller holds, there are analyst upgrades and downgrades. Of all of these, the one piece of news that we know is coming, whether we want it to or not, is earnings. And and we have the ability to see those earnings as they come in terms of when these earnings are likely to come out, and we can prepare for them. All right, now that's important because, and the reason I say that is because when we move along, you're going to see how much more of importance that we're talking about. Now, earnings. All right, one of the things that we can do, and I'll let you know this, anybody can do this in practically any financial site. We just have a way of doing it that's very quick. We use something called the ranker tool, and we can actually do 4 different things with it. We can rank most actual earnings above estimates. We can rank most actual earnings below estimates. We can also rank calendar days to next earnings and calendar days to past earnings. Now, I'm going to go through and mess around with that a little bit right now. So at this point, I want to move over to the tools, and I've already got my earnings ranker set up and ready to go. Now, what I'm doing is I'm coming down and I'm looking at stocks in what I call the pennies and weeklies list. All right, this is a list of penny pilot stocks that trade weeklies. Again, we're only talking about, around 250 to 300 stocks. So I'm going to make sure that's my stock list. And I want to come up and I'm going to click on calendar days to next earnings. That's the first thing I want to run. So I'll click on the run button. And of course, it's going to come back up and it's going to give me a list of stocks. And this is now ranked. Remember, this is ranked by, remember, we have 4 different ways of ranking. I'm ranking it estimated days to next earnings. Now, these are estimates. These estimates are grabbed from various fundamental sources. The best way of knowing exactly when an earnings announcement is going to come out is by going to the actual website of the company and going into their investor relations tab, and you can see it there. But as far as estimates, what we see is today we've got BAC, Yahoo, IBM, EMC, Netflix coming out today. All right. Tomorrow we've got here's the one-dayers. So there's a few one-dayers here too. And when I see the one-dayers, I'm looking at, I'm just gonna mark this. So this is tomorrow. All right. We've got Philip Morris, Goldman Sachs, United Airlines, MTG, Johnson & Johnson, Microsoft, United Healthcare. Let's mark this. This will be 2 days later. And so Qualcomm, eBay, Kinder Morgan, Morgan Stanley, Newmont, First 5 Networks, Intel, American Express, Halliburton. All right. Then we mark one more. So I've got here what came out today, or what's coming out today, what's coming out tomorrow, what's coming out on Wednesday, what's coming out on Thursday. We've got quite a few of them here. And then Friday, what's coming out on Friday starts with American Airlines. So really, I have the top 36 stocks are all stocks that are coming out within the next few days until Friday. Friday afternoon doesn't really mean a lot to me unless I'm trading into next week. All right, and that's fine. Most earnings announcements trade off of what I call the Tuesday, Wednesday, Thursday scenario, or Monday afternoons, Tuesday afternoons, Wednesday afternoons, and Thursday afternoons, which is Tuesday, Wednesday, Thursday, Friday. Those are the times where we see these earnings start to jump around quite a bit. All right, so that's the first thing I wanted to show you. Now, I could re-rank this a number of different ways. And if I were to take a look at just the stocks that are coming out this week, all right, I would stop myself at 36. So what I can do is I'm going to take these 201 stocks, and I'm just going to save the top 36. So 3, 6, and then I'm going to replace that in my stock list. So now I'm looking at the top 36. From here, I can say how many of these top 36, remember you have to change to the stock list, to my stock list now, because I've got all kinds of lists in here that I'm scanning. But I want to, of those 36 stocks, which ones have the most earnings that are above their estimates? Let's take a look and see. So I'm going to rerun this list. And we'll get an idea of those 36. Let me check here. Search. Sorry, I'm hitting the wrong button. There we go. So notice this, 36 stocks, but they're re-ranked now by which ones have had actuals either at or above their estimates. Didn't mean their stock price went up or down. It's simply a fundamental number. And I'm looking and I see a couple 7 and O's and a couple 7 and 1s. And what I could do here at this point is I could then manipulate this information. Look down at the bottom. Here's AMD, 0 and 1. Here's KMI, 0 and 6. All right. Not a great stock I want to be going long into and out of earnings based on the fundamentals. Here's some stocks that might look interesting. First 5, Qualcomm, Philip Morris, Yahoo, eBay, Johnson & Johnson, Halliburton, AXP, United Healthcare, Intel. So we can manipulate the data and take a look at it and try to come up with some ideas and save these going in and out. Now, I'm going to come back to this in a few minutes because I need to go back and we need to do a little bit of review. So the ranking tool will allow us to go in and look at things like days since previous earnings, estimated days to next earnings, actual greater than or equal to estimate, actual less than estimate. Okay, those are the things we can do with the ranker. My next question. Think about this. What are the biggest risks to the option trader? Right? These are the biggest risks. This is not a multiple choice question. All right? This is all of the above. An option trader faces delta risk, which is directional price risk. An option trader will risk theta risk. All right? That's time. That's if the stock you're in just sits there and goes nowhere and you are looking at time. The option trader also risks volatility risk. If volatility drops and you're a buyer of options, that's not good. All right, that's typically not good for your position. So I want to show you a couple of risk graphs, and I pulled these off of our tools. And the first one is a simple price risk graph, which means simply I've got the stock price over here on the left-hand side, and I've got an option trade on the right-hand side. And the option trade is a call option. And we can see if this particular stock goes higher, that's great for the call buyer. All right. But if the particular price goes lower, obviously not good for the call buyer. And if it stays the same all the way through expiration, also not good for the call buyer. Do you realize that 99% of all option traders stop right here? They just simply stop. And because this is the risk graph that you can get on most, if not any, particular option websites, including option brokers. All right, but I want to show you a couple of other tools that you may not be seeing. Those of you that are, especially new members, have not even looked at on the screen, and that is take a look at this for a moment. This is the delta risk graph. So a delta, remember, an options delta it's kind of the rate of change of the option versus the rate of change of the underlying. So if the underlying stock goes up $1, how much is your option more than likely going to go up by if you're a call buyer? And so what we can do is we can pinpoint that just by simply looking at the options delta. And for this example, all right, this example shows a 35.5 call option. All right, and the stock's trading right around 35.5. It's a 35 call, right around 35.5. So if I take the blue line, which is where the stock is trading right now, and I see where all the lines are intersecting on blue, I come across and I go, okay, this option has a delta that's a little bit higher than a 50. Let's call it a 55. That means if AKAM moves up $1, this option should increase by 55 cents. All right. Now this is a target that's ever changing. All right. Depends on how many days to have the expiration, what type of option it is, in the money, at the money, out of the money. It's going to give you a different delta. All right. So it gives you an idea of what price risk is likely to happen. For instance, on a per point change in the market today, next week, next month, expiration. Doesn't matter, whatever type of option you trade, I can get a delta on that option and give you price risk on it any time frame at nearly any price. All right, so that's the delta graph. The next graph is the graph which I call time risk, theta. So Theta risk is the amount of time risk you have day by day, and and especially hurts you if the option stays right where it is. If this was an at the money option, a 35 call, and we know that today this 35 call would have, for instance, it may have a certain amount of time value, but as the market continues to move, that's going to continue to have this theta drop out, and you can see a theta dollars. In fact, if we're looking at 13 days to expiration, we see 5 theta dollars that can come out of this trade between now and 13 days to expiration. 26 days to expiration, 39 days to expiration, and it just shows us the amount of decay that's going to happen if nothing happens to that stock for that particular day. Next is volatility. Now, volatility is really good for the long trader, because if volatility goes up, that's fantastic. However, if volatility goes down, not good for a long option trader, a long call trader, or a long put trader for that matter. And so what this graph does is it measures the volatility sensitivity of the option. In fact, volatility is most sensitive at the money on this particular trade, because you see that's where it slopes up the most, is right where it is. So this particular trade, if I were going to back up for you, it shows that it has some delta risk. It doesn't have the greatest amount of delta risk, because the greatest amount of delta risk is when you're in the money. You have the greatest chance to make or lose dollar for dollar what the stock makes. All right. With theta, obviously your theta risk is going to be greatest at the money. And vega, or volatility, is going to have the greatest change also at the money. So of the three risk graphs that I just showed you, price, and this is where everybody gets it wrong. All right, all the folks that are novice option traders get it wrong right here. They think price is the most important thing on an option. It's not. I just showed you 2 out of 3 charts that show you time and volatility is more important to an option trader than price. Yes, price is important. We need a stock to move to make money, but the real risk in option trades, more than half the time, is going to be volatility risk and theta, or time risk. Now, is there a way to negate all these Greeks with a single event? And the answer is yes. And I didn't say completely get rid of them, but we want to sedate them. All right, we can put these option Greeks into a short-term coma by utilizing earnings or upcoming earnings, and that's the event we're looking for that can sedate. It can sedate your theta, and it can sedate your vega risk. Now, sometimes it'll even sedate the delta risk, but we need to have something moving that can allow us to make some money. All right. So if you're a long call trader or you're a long put trader and you're going into options, into earnings, with an option, do you realize that time is actually almost on your side for a short amount of time? All right. Then it gets taken all away from you again. All right. It's kind of like, to me, I look at it like a 3-day weekend. All right. I love and I hate 3-day weekends. I love 3-day weekends because there's 3 days the markets are closed, and I don't have to look at my computer. My wife, I get reintroduced to my wife again. But guess what happens on Tuesday? All of a sudden now I got 4 days to put 5 days worth of work in. All right, 5 days worth of going back and looking at trading. And also I've got work as an educator I've got to do. So I want you to think about option Greeks like that. All right, we go in earnings. We all of a sudden things stand still. But once that earnings report comes out, everything catches up with each other right away. So is the risk in a trade before or after earnings? For an option trader that's a buyer, the risk is after the earnings event comes out. Okay? And if you want to trade like 99% of the retail public, just buy a call option right before an earnings report on a high flyer. And here's why. Because what happens is, as we go up into earnings, volatility tends to move higher. Option premiums tend to move higher, and then boom, down after earnings. Again, we see the rise into earnings. We see the jump out and lower volatility out of earnings. Rising in, As soon as the earnings come out, falling. All right. And this is actually not. This is actually a drawing chart. If I were to show you some real charts, you'll get the picture. And I'm going to show you some real charts here. But let's just take a look here for a moment. I'm going to move into here. This is a virtual trading platform that I use through Options Express. And I want to show you a couple things. So IBM is reporting earnings very, very soon. All right. I want to show you the IBM. I just brought them up. I'm going to refresh this screen so we're looking at the most important. All right. So IBM's trading around 159.78. Let's go ahead and make this a 160 call. So I'm looking at a 160 call right now, and I see the 160 call is 365 by 370. All right, now this is going into earnings. This is a weekly call option. All right, this is just between now and the end of the week. 365 by 370. Now, what is that telling me? It tells me that if I want to buy this, I can buy it for 370, but I don't want to buy it because I need to do a little bit of homework first. All right, with any trade that I would do, especially through earnings, I want to see why is this option trading at this price. All right, so now I'm going to come over here, and I want to look at IBM. So I'm going to go to stock charts for a moment, and I want to look at IBM. Now I see IBM as a chart. Okay, that's great. Earnings are coming up real soon. In fact, it's showing they're coming up at the close of today. So let's go ahead and change the stock type from a stock chart to, let's add an overlay. Let's add the 7 to 30 day implied volatility. That's the options. Look at this. All right. Start on the left-hand side. See how the implied volatility ran up into earnings, and then even though the stock gapped down, the volatility collapsed as well. Right, so now we're down here, and this is the stock price on the left. This is the options volatility on the right. So options volatility, for instance, toward the end of March was down around 15. Before earnings came out, it was above 35. Then it collapsed right back down within a day or two, back down below 20. The low before this earnings cycle was down below 15. Look where it was just a couple weeks ago, 20, then 25. Look where it is going into earnings, 35 again. What's going to happen? What's going to happen is this stock is, I don't know if it's going to go up or down. We don't know. But based on history, we see that IBM drops out of earnings once, twice, could happen again. But we also see that the earnings or the implied volatility drops. If you were going to buy IBM, for instance, if you were going to buy IBM, where would you buy it? Would you buy it the day before earnings? No, more than likely you wouldn't because you see what happens the next day. But as an option trader, if you bought it a couple of weeks prior when the volatility was down here, and maybe you bought the call option, maybe you bought the call option at 145, all right, and it traded all the way up to the low 150s. Maybe you bought it over here when it was trading at 150, and now it's trading at, not 150. Let's say, you say you bought it at the 150 area, and right before earnings, it's trading around 152, 153. The fact that you know that earnings are going to slam your options down the next day is good enough reason to me to think about exiting that trade right before the close, before the earnings come out. Same thing again today. So the first lesson I want to teach you is that it's not about price. It's about volatility, and it's about time. All right, now I want to show you another trade. Let's take a look at Apple. All right, now Apple, and we're going to update the chart to show Apple. I'm hoping I get you done by 4 o'clock. Apple, same thing, ran up, earnings, slam. Ran up, stock price came down, volatility came up, earnings, slam. All right, now look what the stock price has been doing since the end of June. Up, and away. It's gone from 92. Where is it, 100 today? Close to 100. What's volatility doing? Well, volatility isn't anywhere near where it was. You can see here, I mean, volatility was trading up in the 50s. It's down here at 25 right now. This is actually cheap, all right? But could it be that I'm looking at the wrong volatility? Let's look at the 30 to 60 day vol. Maybe I am, maybe I'm not. Maybe the analysts have decided that and look at this, volatility has actually dropped. So the 30 to 60, I'm sorry, The 7 to 30-day vol is the volatility in which these earnings are going to be announced. So Apple's earnings come out in 8 days, right? So think about this. If we go back and we look and we see, all right, the prior week before earnings, Apple shot up. That was back in January. Prior week before earnings, Apple came down. That was in April, all right, and into May. Remember, sell in May and go away. The last week of April, everything was kind of dropping. Now everything's rising. Is it possible that Apple could get a bump up both in price and in volatility? Yes. All right, so that's what I'm showing you here as an example of an idea of if you were looking at buying options on Apple. But when do you want to get out of these? Well, earnings are in 8 days. They're on the 26th. So we definitely want to be out by the end of the 26th. By the 26th, before the earnings come out, that's when we want to be thinking about getting out of this trade. So I showed you a couple of charts, but is there a way we can go and rank this stuff? All right, is there a way we can rank this stuff? There most certainly is. And it's with something we call earnings effects. And so earnings effects will allow us, and this is an example here, guys, and allow us to look at how earnings affect not only a stock price, so this is price line, but also how it affects the IV, all right, the volatility. So again, if I back up a second, this is price line's price chart. This is price line's option chart. And we are looking here at the short-term options. So what we'll do is we can go into something called earnings effects, and we can go in and actually look at both price and volatility before and after earnings. So I want to show you how that works. All right, so back over to our tools. Now I got the earnings effects ranker right here. And to get to that, for those of you that forgot, you're going to come over to stocks. You're going to go to stock analysis. You're going to come down to earnings effects. You're going to click on earnings effects, and you'll be at the window that I have right here in front of me. All right, so in this case, let me go there once again because I got to get rid of the blue on the screen. All right, so here's earnings effects. Now, my stock list. Does anybody remember how many stocks are in my stock list? All right, was it 200? Was it Robert got it right? Bang. Victoria got it right. 36. Correct, 36. So we're going to take the 36 stocks we looked at that was just this going on this week. And I want to look and see of those 36, which ones had the best price change before earnings. So over the next week, all right, or and some of these are actually happening this week. So it's going to be hard to really judge these. When I look at them, I see that the way these are ranked, all right, Halliburton and UAL. All right, so what is that telling me? That tells me that Halliburton had a 6% increase last quarter, the 5 days leading up to earnings. The 3 quarters prior to that, -5, -5, -6. Look at UAL. Up 4, down 12, down 6, up 4. Right? What am I looking here for, guys? What am I looking for? I'm looking for companies that have all positives or all negatives, or at least something is, for instance, Halliburton might be a good one to look at to the downside because 3 out of the 4 last quarters prior to earnings were going down. All right? Look here, Morgan Stanley. 3 of the last 4 quarters were going up. All right? Now, remember, these guys got earnings coming out in 2 days. So if I'm looking at getting in a week before earnings, I'm looking at the wrong list. I just wanted to throw this out here to show you what was happening this week. All right, so if we were going to look at a picture of Morgan Stanley, and let's go back and let's see, well, a couple days ago, this would have been a really good one to take a look at because look what's happened. Look at the days prior to the last earnings report we had. Morgan Stanley moved up a couple points. Look what's going on. Same thing's moving up a couple points going into earnings. So that, 1 to 2 weeks before earnings makes a lot of sense. Halliburton. Let's take a look at a picture of Halliburton. So Halliburton, remember, it went up prior to earnings this quarter, but the prior 3 quarters it was going down. If you believe that the price of oil has reached a top and maybe is going to head lower, then perhaps it makes sense on Halliburton to potentially look at it to the downside. All right. And that's just, I'm just looking at price now. I haven't looked at anything else other than price. So if I look here, I see Halliburton looks like again, the price has moved down more than up. Morgan Stanley price has moved up more than down. I'm going along here, Blackstone up more than down. A lot of these are, Advanced Micro Devices down more than up. And then a lot of these are 2 and 2s. Is there anybody on this group that's had a pure positive year or a pure negative year? And that's what I really search for. Those trends that are just really fantastic trends. And I'm looking. And remember, we're just looking at stocks that, here's one that's pretty close. We're just looking at stocks just that are, have earnings coming out in the next few days. Okay, American Express. Let's look at American Express for a moment. Picture of American Express, up prior. Look at it's going up prior. All right, so American Express looks like a potentially good one to look at on the long side too. Now, I'm going to take the trades that I just showed you. First of all, I'm going to do something really cool. I'm going to clear out all the check marks. So all the check marks are cleared out. Now, what I'm going to do is I'm going to check mark Halliburton, Morgan Stanley, Blackstone, AMD. Let me see. I don't want to leave anybody behind now. Let's see. 2 and 2. 2 and 2. Whoop, that's a 3 and 1 right there. Bank of New York Mellon. Let's check mark that one. Let's see what else we have here. Negatives, positives. General Motors had some positives. We're going to check mark that one too. More positives than negatives. All right. Microsoft, more positives than negatives. As we come along down some more. Visa, more positives than negatives. It's almost a trend going on here with some of these more positive and negative stocks. Philip Morris, more positive than negative. Johnson & Johnson, more positive than negative. Qualcomm, more positive than negative. So what I've done is I've check marked every one of these that look like we want to move to the next round. So now I'm going to add the top 12. There's 12 check marks on here. Let's count them up. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 check marks. I'm going to now replace my 36 stocks. My stock list now has 12 stocks. From here, I'm going to go to IV best change before earnings. Which of these 12 stocks are having the highest increase in option premium as we head into earnings? Here we go. Microsoft, 14% increase. Philip Morris, 12% increase. All right, General Motors, 12% increase. Let's just take a look at these for a moment. So I'm looking and I see when are the next dates for earnings announcements. The 19th and the 21st. So the 19th is Friday, and wait a minute, 2021. That makes no sense at all. It must be coming out the following Monday. So these 3 trades could be something that we can move forward with. So if I look at Microsoft for a moment, I'm going to take a look at a picture of Microsoft. And I see here the earnings came out and the stock dropped. But I don't care about what happens after earnings. I want to see what happens the 4 or 5 days prior to earnings. Microsoft on the rise, by the way, too. So at this point, what I'll do is I want to make sure that I'm dealing with an option that has the volatility pumped up into it already. All right, so let's just look at Microsoft on its own. So Microsoft, I want to look at a stock chart. I'm going to go back to stock charts. I want to look at MSFT. Here comes Microsoft. Here comes Microsoft, and here comes the options. And look here, the options, the stock went up the few days prior to earnings. Options went up. Stock went up a few days prior to earnings. Options went up. Stock is going up prior to earnings. Options are going up. All right, so volatility could get up in here to around the 40 area by the time we get there. Now, the next thing I got to figure out is what options are we actually talking about here. So let's look at where's Microsoft at right now, trading around the 54 area. Let's look at 50, 52, 55. And I'm actually going to look at my broker screen because it's going to give me the most real time. So I'm going to pop back over here to virtual trade. I'm going to look at MSFT. And I want to look at those call options. And this is what we're going to do. So we're going to look at the weeklies first. I want to show you how we do this. So we're talking about right now a stock which is trading at 50, near 54. I'm just going to look at the at-the-monies, all right? This is the 54 calls, all right? Now they have $1.15 to $1.16. Pretty liquid, a penny between the bid and the offer. So I'm looking at this one, but is this the right option? Because remember, we have to see when the earnings announcement's going to happen. When is the earnings announcement going to happen? Oh, it happens in one day. So we may be as high as we can get here. I mean, this is too soon. All right. Had this trade have happened, had we have looked at this 3 or 4 days ago, we'd be talking about being in something around the 52.5, 53 area that already is going higher, and it has been higher. You know what? Today's not the day to get in. Today's the day to be thinking about getting out, or tomorrow is the day to be thinking about getting out. All right, so sorry, I still think it's the 15th. I told you this was live, guys. So let's now look at that one that starts on the 21st, and if that doesn't work, then we're going to move forward 5 days. So the one that's on the 21st was, again, I'm looking, okay, 20th. Sorry, wrong screen. We've got the 21st, General Motors. Let's take a look at General Motors. GM. GM is my stock symbol. And stock's trading around close to 31. Let's just look at 31 for a moment. Again, we're talking about something that is already, it's already happening, okay? I mean, what I mean by it's already happening is the earnings are actually going to come out in a couple of days, right? If you believe GM is going to go up tomorrow and the following day, then here's something that will relatively have it will have very little time value movement, and I'll tell you why. If you go look at the stock chart of GM, you're going to see General Motors picture. This is the stock chart of General Motors. Now it actually looks like it's kind of topped out, right? And even if it goes sideways for a couple of days, I'm more interested in this chart of General Motors. As I type it in, what is this showing us? This is showing us the implied volatility. Now, you know what? It's not on the rise like it used to be. It was on the rise in the quarter before. It was on the rise before that. This one tends to rise like 2 or 3 days into earnings. So maybe we're just about to hit the rise. So would this be potentially a good 2 or 3 day trade? Maybe. All right. But again, what is the exit strategy on this trade? The exit strategy is to be out prior to any hint of the earnings announcement. All right, you might not make much, but again, it's all about risk. Now, let's back up a second. Let's go ahead and start over again. I want to go back to my earnings ranker, and this time what I want to do is I want to re-rank those penny and weeklies once again. I'm going to do something a little different. So I showed you how we look at stocks coming into this week, but a lot of the times what we really want to be looking at is what's happening the following week. So I'm going to re-rank this. And what I'm going to do this time is I'm going to clear all these 201 stocks. And what I want to look at is stuff that's coming out 5 days or greater. All right, we jump to from 4. All right, that's the weekend after that, because then we get to 7. And you see here, let's kind of go along, and we can look at if we get rid of everything except the top 39 stocks. Now we're talking about the stocks we can look at going into next week. In fact, I won't look at the top. I won't look at anything but we'll look at 40, 41, 42, 43, and so forth. What I want to do is I want to take 7, 8, 9, 10, and those are the ones I want to look at. The ones that have earnings coming out 7 days from now, 8 days from now, 9 days from now, 10 days from now. So I'm going to grab some of these. There's our 9 days from now. Boy, if you don't think the swelling of earnings is happening next week, then you just don't know. But look at all these niners that are coming up. All right, this is Wednesday. This is next Wednesday. A lot of 9s. In fact, my finger's getting tired from hitting the 9 so much. There's Win. Baidu, that's a good one. All right, moving along. Amazon. And there's number 11, so I'm already there. All right, couple more clicks, guys. What we're going to do is we are going to save these stocks. I'm actually going to replace them. Yes, going to replace those stocks. And I want to replace those 12 stocks now with 66 stocks that are happening next week. So let's go ahead and do the whole thing again. Earnings effects ranker. I'm going to come back to the top, and I'm going to use my stock list. Remember, my stock list is changing. Price change before 4 earnings. Let's see what's happening. Now, what we can do here is we can just take a look, and we can say, all right, here's the top 5 that are really showing some significant movement. So let's clear them out. All right. Solar City. I can tell you right now, that's going to have some high implied volatility with it. Gilead, Win, Conoco, Suncor, and we have some others here that look really potentially good too. The other thing we can do is, I'm going along here and I'm thinking, all right, 3 out of 4 to the downside, 3 out of 4 to the downside, 3 out of 4, 3 out of 4, 2 out of 4. Let's get rid of Suncor. Let's just look at these 4. These are all downsides. All right, so by the way, those of you guys that have access to the Money Calendar app here on the tools, have you seen what the Money Calendar is looking like over the next couple weeks? Anybody want to comment on that? Tell me what direction they see the Money Calendar going into overall, looking at the monthly. Should I bring it up to show it to everybody? Yes. All right, I'll do that. Let's just, you know what? Let me grab something that I'm not going to be using. Here we go. We'll come on in here. Let's hit that. Going to go to the tools. Going to go down to Money Calendar. I'm going to hit the monthly, and this is big. I zoomed in so that everybody could see the chart, but I want to show you next week. Look at that. Here we are today, the 18th. Look what happens. It looks like autumn, for the next couple weeks. As earnings start to swell, there's a lot of uncertainty. And so when I look at the earnings effects ranker, and I see these guys right here, these 4, remember, I want to replace my stock list with those 4. And I want to look at those 4 now, and I want to see what? I want to see what's changing the most in IV before earnings. So now, Gilead, 25% increase in implied volatility the week prior to earnings. Solar City, 12%. Wind Resorts, 9%. ConocoPhillips, 4%. Let's just look at Gilead for a moment. All right, so I want to go back to my stock charts. I want to look at Gilead. GILD. Let's hit that. Let's take a look and see what's going on with this stock. Wow. Okay, big increase in vol. All right, little drop in the stock price before it rebounds. Increase in vol from 84 to 88. Big drop in the stock the following day. Increase of starting in vol. All right, remember, we're ahead of this now. This is not going to happen this week. These earnings are going to be coming out in 7 days. So we're ahead of the curve, right? So I look at this one and I say, all right, are we potentially going to move lower into earnings, right? And remember, we're looking at a couple of days into earnings. So if I back off and I go, all right, here's earnings, 1, 2, 3, 4, 5. Will we higher 5 days prior to earnings back in January? Yes. All right, here's earnings, 1, 2, 3, 4, 5. Were we higher prior to earnings? Yes, because this is when the earnings announcement came out after that close and opened down here. So we did see a drop. And of course, that's what we look at. That's recognizing patterns and trading patterns. And this is an earnings pattern. So now I'm looking at this and I'm saying, all right, let's go to the options. GILD. This question is going to come up at least once, so let me answer it real quick. Should I trade the options that expire this week? So I am sure to be out of earnings before they come out. You could, but here's the problem. You're not going to get the vol increase. And the reason you're not going to get the vol increase is take a look at this. Look how cheap this option is. This option is trading at 1% the price of the stock. Unbelievable. 1%. 1% of the price of stock. That means that between now and the end of Friday, if the stock just makes a 1% move to the downside, possibly could be a good stock to take a look at. All right, so that's something we could look at. But I want to show you where all the volatility is. It's not in the July week 4 because these options expire before the earnings announcement. Look at the July week 5. All right, 212 by 216. Now, if any of you in the room know something about options, you probably, your logical part of your brain says, wait a second. I know when options go farther out in time, they are more expensive, but they're in incremental amounts that you lose most of that time as you get closer to expiration. Why is this option with one more week to expiration worth more than double the price? I've never seen that before. The reason you may have never seen that before is because you may have never seen what happens before earnings with like a week 4 option. This doesn't have the volatility built into it. This trade with the July week 5 does have the volatility built into it. There's another way we can look at this too. I'm going to show it to you right now. We can look at an options chain, which I'm going to pull up on my site. I'm going to look at the options that expire in 4 days and the ones that expire in 11 days, and I'm going to prove to you that everybody's interested in next week's options. So here's the options that expire in 4 days. Remember that 89 by 92? Look at the implied volatility. Here's your implied volatility right here, the IV. All right, the IV is in the 20s, the low 20s. Look at next week's options. It's in the mid-30s, okay? That's what happens when you're looking at options and you think there's some sort of disparity between the two. It's because all of the vega, all right, and, of course, theta, based on uncertainty, are built into options that expire after the earnings report. But that's going to change because this number is going to go lower once those earnings reports come out. The question is, do you want to be in before? You want to be in and out before, or do you want to take a chance on the stock jumping? The problem with jumping stocks is volatility tends to go lower faster than the stock would jump higher or lower, depending on which direction you're looking at. But if I were looking at a potentially trying to grab some extra juice out of Gilead for this week, you're not taking advantage of an increase in volatility. But if you look at the next week's options, and you look at the fact that, look at the puts, and for instance, the 88 puts, all right, they're trading 52 by 2 by 56. Or look at the 87 puts, 201 by 204. These are the implied volatility more than likely will rise in value as we get closer and closer to expiration on this option. All right. If the stock price goes down, then the puts should go up in both an increase in delta and to the downside, an increase in vega, which would offset your theta decrease. Okay, so that's really how you trade earnings. You get in, and then you get out that afternoon before the earnings announcement is released. So Gilead Science looks like a very interesting bearish opportunity for the trade. And you've got a couple of things, and we look at things, we try to connect the dots. The dots are that Money Calendar is kind of showing us that there's going to be some surprises more than likely over the next couple of weeks. What else are we looking at? Well, we see that implied volatility is likely to go much higher for Gilead, because we saw that on the ranker. All right, 25% increase in the final 4 to 5 days. It's increased on average double digits the last 4 quarters. So that's important to know. So of the 4, I like Gilead because it portrays the most amount of increase in options in what we call extrinsic options premium, all right? Or at least the least amount of decrease if the stock goes nowhere. All right, so that's Gilead. So that is the one that I like, the one I like to the downside. And so Earnings effects, again, if I can kind of go through them once again, it shows us before earnings report. We can also look at after earnings report, and that's something I want to show you with Gilead once again. This is what happens if you decide you want to stick around a little more. Take a look at what happens after earnings. So let's look and see what happens after earnings on these 4 stocks. Look at Gilead. Drops an average of 40% in implied volatility right after earnings. 16, 46, 36, 52. All of these drop. It's just a matter of how much, right? So, important to know. Absolutely important to know when you look at these charts. Okay? So, that not only were we looking at it rises in price, so we have price change rises, we look at IV change rises. Before and after, right? Before looking at, more likely going higher, after looking at most of the time going lower. So what do we do with all this information? I just showed you. We take a look at high option implied volatility plus a high degree of future predictability, and then buying and selling options before the earnings report, right? So for instance, buying, do your homework, right? I'm not recommending trades on my webinar here. I'm really recommending that you get educated. You take the information that I showed you and that we're using here with the software to find trades that have that ability to go higher in terms of option premium, even if the stock just stays the same, even if it just goes sideways. All right, let's do one more. Let's take a look at one more. So these are some case studies. If those of you that got my emails the last couple of days, I talked about case studies, bullish case studies in LinkedIn, John Deere, and NVIDIA. All right. Now, the reason I'm bringing these up is because these were based on the entire earnings cycle, not what's happening next week. All right. So if we were to look at the entire earnings cycle, what we're seeing here is these are price price changes, not volatility changes, price changes on these 3 stocks. So if I were to go in, this is another way that you can do this. If you don't want to go back and do all the rankings, what you can do is you can actually go to your stock list. All right. Go to website, go to lists, and go to edit list. Right now, these are my stock list. This is my stock list right here. So I can take this out and I can put in LNKD and hit enter. And I can put in DE and hit enter. And I can put in NVDA and hit enter. And then I can go ahead and replace. And now, whoa, I'm sorry, I put the wrong stuff in. I put in the Dow Jones 30. My mistake. Let's clear it out. Goodbye. All right. Remember, again, LNKD, DE, and NVDA, NVIDIA. Save. Excuse me. Save. All right. Back to stocks. Back to stock rankers. In fact, I've already got it. I have the earnings ranker up here, but I want to go to the analysis, and I want to go to earnings effects, and I want to see these 3 stocks, and I want to see, what did they do in price change before 4 earnings? Did they go higher? Because I have a stock that looks like it wants to go lower. Okay, 3%, 3.75, 3.69, 3.46. All right, how about volatility? They all moved about the same in price. Let's look at IV before 4 earnings. Did anything happen to move higher? NVIDIA had the greatest IV move before earnings. Let's look at NVIDIA. Quick pick. Oh, yeah. New highs before and even after earnings. Before and even after earnings. However, again, remember what happens after earnings. We see a crush in volatility and a crush in time premium. So we want to look at NVIDIA. This is how we look at it. We're going to go back and we're going to say, all right, where is NVIDIA? This is 811. All right, we're talking about something that we don't even want to get into right now. But somewhere around the week prior, we want to be looking at NVIDIA as a potential bullish trade going into earnings. All right, guys. So that was the bullish case studies, and I liked NVIDIA out of those 3. The bearish case studies, I had Potash, MetLife, and Caterpillar. Let's go ahead and look at those. And so again, what I can do is rather than go through everything, once again, I'm just going to go and edit my stock list. Okay. So Potash was POT, MetLife was MET, and I forgot the last one, Caterpillar, CAT, CAT. And then save. And now I'm going to go back to my analysis. Going to go to earnings effects. And then over here, we want to look at what had the best price change before 4 earnings. Did anything stand out? Not really. So to me, it's all about what's having the best option change. What option premiums are getting pumped up before 4 earnings better than any, and that would be Caterpillar, more than twice as much as the others. So quick pick of Caterpillar. And Caterpillar 2, because the overall market's been moving higher, Caterpillar 2 could be one to look at, but I wouldn't look at it right away. All right. This is 8 days. Actually, you could look at it here real soon by the end of the week. Perhaps Caterpillar might be one to pay attention to. It's coming right off of the highs for the year. Gets above and closes above this area. You know, we could see it jump up into the 82, 84 area. What's an option on Caterpillar look like? Well, we're going to have to look at the week 5 options. So I'd type in CAT, and I'm going to look at August week 5. And we're talking about an 80 call if we're going to be at the money. All right, so I'm just curious. What's the week 4s look like? Look at that, 63, and then 173 by 178. Go 1 week farther. Does it double again? No, it goes up 20 cents. That means all the volatility is around the July week 5, the last week in July. Those options. All right, so those are the ones that you would look to get in, and then make sure you're out by prior to the earnings date at which they come out. All right, guys. So, hey, hope you liked everything that I had to show you. Jade, are there a few minutes, any questions before I tell them how we're going to get into the next month's Trading Essentials webinar?
Oh, there's a couple of questions in here. One guy's just asking to confirm you're just doing calls, or on the session you're just showing calls and puts before earnings, no spreads.
That's correct. Yeah. So I really think the spreads make absolutely zero sense at all before earnings, and the reason why is because you look at unless you're dealing with a high dollar stock, I get it. But if you're talking about John Deere, you're talking about Caterpillar, forget spreads, because what spreads are going to do is they're going to lock you out of that. For that rise in volatility you have in the long option. Then guess what you're also going to have? You're going to have a rise in volatility on the short option too, which is going to hurt you just as much as the other one helps you. So a lot of times most of the time I like to look at if it's a vol play, which a lot of times earnings are vol plays, then you do long options only. If you're going to go through the earnings, if you decide you want to take a ride through earnings, then by all means, I would flip what I just said and I would say, do the spread. If you're more interested in a price change than a vol change, then the spread makes the most sense. All right. What else, Jay?
There's a handful of requests about, what type of strategy, what type of calls, how far out you do that. I just wanted to reiterate, you're not making any recommendations on this. You're not talking about
again, it's the whole thing, guys, is you have the software, all right? Go in and look at this stuff for yourself and do the homework. That's the important point. And if you happen to be on here and you don't, let me just type in a little something here for you. So I want you, if you don't, go to http://www.tomsoptiontools.com. In the upper right-hand corner, free trial. Get the free trial and then do the homework. You can see what I did. And by the way, I will have the video out to you probably within the next hour, so that you can rewatch the video and then go through yourself and look at what we've what I've laid out in terms of the option trades. And I'll email you. I'll do a follow-up email for you, and I'll follow up with the trades that we looked at, as well as where you're going to want to go to take a look at this information for yourself. All right, next month. All right, next month we've got a multi-part series, and I'm going to tell you who the guy is. For those of you that are still sticking around and haven't left yet, some of the guys are heading out the door. But next month I will have Keith Fitzgerald with me. All right, this guy doesn't do webinars, but he does them with me. All right, he does not do webinars. He does CNBC, he does Reuters, he does Bloomberg, he does Fox Business News. He does a lot of that. But I have corralled this guy down, and he's going to be doing the Trading Essentials webinars with me. And so we're excited because he's going to go really, really deep into volatility, and he's going to be talking about some of the indicators that he uses as well. That we're going to be using the option tools along with it. So be on the lookout for that email. I'm going to have a registration link for you on that one. You definitely want to get to that one because you won't see this guy. He's just not. He isn't available like he is to my team. So we're going to make sure he's available for you. And guys, that's it. Thank you very much. Jay, I appreciate your help in the back of the room. Have a recording out here shortly. And again, if you have any questions and we happen to not get them answered for you, support at tomgentile.com. I just put that out there too. And we'll try to get your question. Remember, we can't give you specific trading advice. That's something we cannot do. If you have questions on general questions on volatility, options, etc., hey, we're here for you. All right, guys. Hey, have a great afternoon, and we'll see you next month with our Trading Essentials. Bye now.